Fiscal 21, I would say fiscal 20 and 21 were exemplary years for the investment banking industry. Fiscal 21 was a notch higher, and in my judgment, at least over the last decade or so, was a great year for the industry. Just to put some statistics around this, fiscal 21 saw 120 deals on the ECM side, raising more than 2,20,000 crore. And if you contrast that with fiscal 20, that had 65 deals raising about 140,000 crore. Similarly, on the advisory and M&A side, deals announced fiscal 21 was close to $120 billion, contrasting with about $90 billion in fiscal 20. And if you look at the components of the ECM business, mainly around IPOs and QIPs, and we also saw during the last 2 years the largest rights issue coming in from RIL. And on the M&A and advisory side, the financial sponsors, private equity, and the tech space really dominated, the space in terms of doing deals. So overall, for the investment banking industry and for us, it's been a good time. It's a very busy time.
Right, that's and always good when business is good, Ramesh, isn't it? Yeah, go ahead, complete your point.
Just giving you that we expect fiscal 22 to continue on similar lines. There's a little bit of pause and fatigue in the ECM market, just given the volumes of deals and some of the bad news around COVID. But from a trend line perspective, we expect this year to be quite robust, and the pipeline is quite strong.
Ramesh, we also understand that the composition of money is changing. Surely big dollars of liquidity is coming in, but the way we've seen historically, just American companies or US-based North American funds have been dominant in India. But this time we are seeing newer geographies representation increasing in the capital flow. Give us some flavor of the kind of money which is coming in terms of newer geographies into Indian markets and Indian industry, and also some of the conversations with your large clients. What are they looking for here in India?
So if I were to look at money flow, particularly in the context of the equity capital market deals, for some time now, Asia and India have been dominant, but I'll just give some new perspectives. There are a bunch of investors, particularly the sovereign wealth funds, who have been present in the secondary markets, but who are not so active in investing in IPOs. We are now seeing a change in that trend. In some of our recent IPOs, we saw sovereign wealth funds actually come in and invest a reasonable amount of money. This pattern we expect it to continue. Similarly, when we look at emerging funds out of Europe, who have preferred participating in large caps and in the secondary markets, actually have moved the bar a little bit to participate in mid-cap IPOs. We are seeing the trends continue. We are seeing very active involvement from hedge funds who are actually opening their long-only books to remain invested in some of the IPOs. So this is a bit of change that we are now noticing compared to some time back. And in our conversations with clients, both private equity investors and corporates, I think there is reasonable optimism about deal making. There is also optimism that Indian markets have a great architecture to allow them listing or do M&A deals. And there is also optimism that the flow of money will continue. So I just feel, except for these odd windows when we may have abatement, in general, both on advisory and ECM, we continue to be seeing a fair bit of optimism with both investors and clients.
Go ahead, Ramesh. Ramesh, also talk to us about what kind of inquiries are coming in, the pipeline. We understand that Nykaa is there in the offing, Zomato is there in the offing, Policy Bazaar, some of the big new tech companies which are showing interest to come to D Street. which are the, or if you could share names or some flavor of inquiries or the type of clients you're working on as far as pipeline is concerned going forward?
I will not give you the names, but I'll share a flavor which will give you an insight into what kind of pipeline we are seeing. I think 2022 and 2023 is likely to be dominated on the equity capital market side by new listings from the tech space, the new age companies. I think that pipeline is quite active. There is also good interest from investors to invest in these companies. You've already seen some announcements of pre-IPOs that have happened. So we expect the tech companies and new age company IPOs to be very active. The second space where we are seeing reasonable inquiries is from the specialty chemicals and allied spaces. We are actually seeing some very interesting and large names who have remained unlisted over the last many decades, but now are finding it worthwhile to think about listing. The healthcare sector continues to see inquiries. So we will see listings of healthcare and occasionally large auto ancillary companies coming in. And last but not the least, the financial services space will see IPOs. There are a fair bit of names that are likely to get listed over the next 12 to 18 months. So this will give you an idea of the flavor of sector. But I must also add here that if you see the last 1 to 2 years, we saw real estate or we saw the financial services dominating, the IPO space in particular. We are now seeing more diversification in sectors. So we are seeing newer sectors, like I mentioned, specialty chemicals, agri-chemicals. So, and in the consumer space, we are seeing some very interesting companies. So this is actually making it quite interesting for investors to engage. And I think for our judgment and our conversations with clients and investors show that there will be reasonable interest to partake in some of these offerings. On the QIP, there was a lot of fundraising that happened front-ended in fiscal 20 and a little bit in 21. So we think that while there'll be some action in fiscal 22, a lot of the action may happen probably in fiscal 23.
Are the average deal sizes also going up? Is there more risk appetite among investor community for some of these newer type of assets or companies you're giving indications about?
Yeah. So I'll just make one statement here. See, when we talk to investors and we talk to our promoters and clients, there is a profound recognition that the sustainable way to build wealth is through a proper listing on the stock market and continuing to nurture it. So it's in this context that there is one trend line that you've seen every year over the last 3-4 years, that average deal sizes have kept moving up. And investors generally like large floats where they have ability to participate. The impact cost is less. And these companies, if they do well, they have the ability to get into various indices over time. So actually, we are noticing conversations. We are noticing that companies are now looking at much larger floats than they were before. The average deal size moved to 1,000 crores. But I will not be surprised if we take the next 1 to 2 years, this needle will further move a notch up to maybe 1,500 crores. I'm talking of an average. There are other deal sizes which are larger. Just to give you 2 examples of the last 2 years, if you saw SBI Cards was the largest IPO that happened in the private sector, close to 10,000 crore. Then this year, Gland Pharma happened, which both of these deals we were involved. That was close to a 6,500 crore IPO. So larger deal sizes are preferred by investors. And some of these new age tech companies also, we are seeing similar conversations where the deal sizes and the floats are likely to be large.
Ramesh, before I let you go, a quick word on where are we on the cycle as far as the stock market is concerned. Do you see, upside 12-24 months as far as the earnings are concerned? Because if earnings remain buoyant, capital will continue to come into the markets.
So the answer, I'll break it up into 2 parts. I think we are currently all in this second wave that has hit India in particular and other parts of the world. So the mood is a little muted. But if you have to have the same question before that, I think there was more optimism that there was a turnaround. A lot of companies were doing well. Some of the industries and sectors found their way through this muddle. So currently, I think you'll have to give it little time for companies to, just fend off this temporary lockdowns and stuff like that and come back. But in general, I'll make 2 points. In the corporate and the economy, there is more optimism. that if you look at India in particular over the next few years, that it will do well. And the second thing is that given this backdrop, and given that governments all over the world are loosening their purse strings, we expect the flow to be quite good for India. The emerging markets in particular are likely to benefit, but India in particular will get a reasonably good proportion of this fund. So we think that liquidity will not be a challenge, but there'll be those pockets of closed windows when you have to be careful. But otherwise, the trend line is quite positive when we look at the next 2 or 3 years.